Okay, good. So, like I said, the same principle, the same strategy, it doesn't change.
Okay.
It's just, you can apply it to any market. If you look at the same principle, the trend is up because it is trading above the 100 SMA. In this case, I use 100 SMA. It is trading above the 100 SMA. And it tells me that it's bullish now from 2014. But this is a monthly time frame. Now,
okay,
what we have seen is after USD Canadian dollar got to a peak of resistance of this level, which formed a double top, we started seeing decline since 2019, about April, May, and it came now to an interesting point for us to look at. It is so interesting because it came to this interesting point of significant support zone. This is significant support zone because 1, 2, 3, 4, and 5. So in the month of February 2021, it closes like an armor, a bearish, like an armor, the bearish body, but it closed like an armor at the significant support zone. So at this point, I don't use volume in Forex because, like I said, the volume is a decentralized market, so we can't get the accurate volume. So now, what am I looking at now? Which is what we're going to be dealing with when we're talking about our entry and exit. So I use a multiple time frame analysis. So my bias at this point is to go long in the month of March in the pair USD Canadian dollar. Now, but this is a way to determine my entry and which I'm here to teach you. That's what we'll deal with in the masterclass. We're going to look at how to determine your precise entry and your precise exit. Despite the fact the month has given us a signal that we should be going long in the month of March, doesn't mean that we should enter at that price. We want to minimize our risk. When I mean minimize our risk, we want the closeness of we want to place our stop at a reasonable point that it reduces our risk exposure and we have a maximum gain. So I do what we call the multiple time frame analysis. What am I going to expect? So in further masterclass that we're going to do with by the time we finish masterclass, you understand the concept of Fibonacci, and also that's one. We can also use the moving average again to serve on a multiple time frame analysis on a 4 hours time frame. The moving average in this case will now serve as support, and we now take our entry using the same criteria of if we see a retracement and the moving average serves as support, and we see a pattern that signals a trend resumption. Same thing we're going to see on Fibonacci. So we're going to use Fibonacci to pick our precise entry. We have a bias. Our bias is to go in long based on the various criteria that we have seen. Now, we will now want to pick our entry using some tools that seems to be precise. What I say seems to be precise is because a lot of people work with these tools and try to use these tools to determine their entry, their exit, and the like. So we're going to be working with Fibonacci and moving average again on a lower time frame now in the direction of the higher time frame. So moving average on a lower time frame, Fibonacci on a lower time frame in the direction of the higher time frame. When I mean the direction of the higher time frame is a monthly time frame. If you're using the weekly time frame as your higher time frame, it's what you're using to determine your trend. The higher time frame is good to determine your trend. The lower time frame is good to determine your entry, and sometimes the change in trend is always seen quickly on a lower time frame. So these are things we'll deal with in our masterclass. Definitely, we are going to review the criteria too. Our next lecture, we are going to work with how to review the criteria. The criteria is very simple. It's not a stressful criteria. You've done that perfectly well using the analysis. We're going to work with that criteria. And like I said, it is what you can apply to any market. I apply it to any market. You can apply to the bond market. You can apply to any instrument you want to. The same foundational basis. So we are going to be developing system.
Okay.
Already we've been developing system though. So we're going to be using that system. And what we are going, our goal in this case is we want to be able to determine our entry, our exit. Our exit is two. When I mean our exit, both in the stop loss and both in the take profit direction. We cannot be right all of the time. There will be times we would the market will go against our projections. But
okay,
how do we cut our loss at appropriate price or at the appropriate level? So we're going to be using, like I said, Fibonacci and moving average for this. And we are going to be also dealing with trade management. When I mean trade management in this case is, how do you scale in trades if you want to add more to your position? How do you exit your existing position? Do you exit everything at once, or do you scale out gradually? So also we're going to be using those tools. We're going to be using mathematical tools, calculations. I have a particular approach. When price has rallied by 50% for my entry, I know what to do. When it has done 75%, I know what to do. When it gets to a particular point in moving average, I know what to do. So these are things we will look at in our trade management angle. We're also going to work on our risk management. How do you assign risk to each of your trade? How do you what value do you use for each of your trade? These are things we look at. But most importantly, we are trend traders. I love to keep it trend trading. That's what we want to do. And you will notice from what you have done, you'll be studying the trend and you'll be trading the direction of the trend. That is the most important thing. So in our next class, I'll take you through Fibonacci, but I would like you to read through Fibonacci, and again, still study moving average. Now, you will notice we don't use moving average in this case as a crossover. We only use it to determine our resistance and support and to determine our trend. So you can use moving average as a crossover, but I don't use it. I use it for trend following and to determine when trend is going to resume or when trend has changed. Crossover also works when trend has changed, but in a way, I use moving average and price to determine when trend has changed. So all of this will help us to determine our entry and exit. So before we leave, like I said, this class is going to be an introductory class. Read a bit about Fibonacci, and I'll send you materials on Fibonacci.
Okay, all right.
Fibonacci retracement and Fibonacci extension. Key. Fibonacci, how to plot it, Fibonacci retracement and Fibonacci extension. I will deal more on that because this is the tool I will use to determine my exact entry point and my exact exit point. And at every particular time point, it has worked. It has helped us. Let's do a review of the Nigerian market, for instance. And I said something earlier on. I said in this month, I will not do anything in Nigerian markets. Let's do a top-down approach. Top-down approach. A top-down approach, you will notice that this is the Nigerian NSE All Share Index in the monthly time frame. In the month of February, we saw a massive a close depreciation in the value of the All Share Index. There was depletion. So in the month of February, the market opened at 42,412.7 basis points, but closes at 39,799.9 basis points, a loss minus 6.2%.
Yeah.
If the market lost that, so let's go to individual sector. Now, in the month of February, it shows that people are leaving the market. Let's work on volume. Do we see volume to back that up? You will notice that we had a reduction in volume compared to what we had last time. Last month, in the month of January. Two things. Number one, it means that we don't have high number of transactions that has taken place in the month of February. 2, most of the transaction was likely on the sell side than on the buy side, because that's why you see the red.
Okay.
So
Okay, that signifies the sell volumes.
Sell volume. So likely on the sell volume. So we had a bearish month in the month of February. Let's look at what makes up the all share index. Let's look at the major sectors. The first major sector is the banking sector. Look at what we had in the banking sector. Now, we saw a full bearish candle in the month of a depletion in the value of the banking sector in the month of February, coupled with high volume compared to what we had in January. It shows that a lot of people are willing to sell than those willing to buy in the sector. Top down. Let's go to the consumer goods. Same thing. Let's look at okay, this is consumer goods, same thing. No, let's look at the industrial goods. Definitely same, but the volume was low.
This chart now, is it monthly chart?
Yeah, the monthly charts. We're looking at the monthly chart because the trading month ended on Friday.
Okay.
25th or 26th. So the insurance sector was largely down. So we see most of the sectors, oil and gas was the one that appreciated a bit in the month, but on a low volume. So we've seen that largely the market is largely down in the month. And
so when you say you will not trade the Nigerian stocks, does it mean you will liquidate all your positions?
Yeah, definitely. I take position of, I close all my trades. It's either I stay on cash, but basically I trade various markets. I'm on the FX level, on the commodity level, so I take my cash to the commodity level because then when I see opportunity, I go back, I put some money, put it in there in the stocks market. So let's look at the individual stocks to determine something. GT Bank was likely down in the month. I lost Zenith Bank was a bit down, but the sellers tried to take it down, but the buyers took it up a bit, but eventually the sellers were in control in the month. So you scale through. We're going to use that tool we used and in market view to determine some things there. So in a way, what I've done is to have a bigger picture of the trend. So there's a likelihood there could be a correction, which could take weeks or months in the Nigerian market. If this correction happens, based on what I've seen on the Nigerian stock index, I rather wait for all the stocks to come to trend down to the 100-day moving average or below the 50-day moving average also, and shows a signal that there's going to be a reversal accumulation before I go back into the market. So these are things we will look at. We'll look at the Fibonacci are tools that will help us out. These are tools that will guide us and will help us out in a lot of things. So we are likely going to be dealing with larger moves because we want to profit from larger moves. And that's why we are going to be doing trend trading. Our approach has been trend trading approach. I don't trade the noise. I prefer trend trading. We look at the trend, like I said, the moving average helps us out. The benefit of trend trading is that it's adaptive around your lifestyle, whether you're working or not, whether you have a full-time job or not. Trend trading helps you. You don't spend more time in the system. You can trade all markets. It has been proven to be right, to give a hedge. It has low risk, high reward, and simple to learn. It's a stress-free approach. It leads to empowerment of many at time. Now, the characteristics of a trend trading is that it follows a trend. It doesn't predict the trend. Now, also you don't try to pick the top or the bottom of the market. Instead, you follow a trend.
Yeah.
You're not right all the time, but you're making the best trade. You don't need to be right all the time, but when you make the best trade, 2, 3, 4 best trade will override 7 wrong trades. When you make the best trade when it comes to trend following, that is why it's key. You have to be patient with it. You have to make sure your criteria aligns. Your selection trading criteria is aligned, and you pick your entry at a precise point. Now, the component of trend trading is this: you identify when a trend is in place. Now, if you look at, let's look at this, for instance, the NSE All Share Index. The trend is up.
Yeah.
But we are likely going to see a correction. Now, and a lot of things can help us determine where we are going to see a likely correction, a resumption in the move. So we may say that can the NSE come back to 33.99, then for another re-entry. So the zone of 35.63 and 33.99, this is a retracement zone before we can be thinking of buying stocks, before we can be thinking of resumption in the trend in the NSE. So these are things that will help us. These are things the trend trading does. It makes you identify a trend and knows when there's going to be a correction and the resumption of the trend. Then you have a low risk entry point. By the time we dive into Fibonacci and moving average, you know, with the trend trading approach, you enter at a relatively good entry point where the risk between your exposure between your stop loss and your entry is so minimal. Then you also, with the trend trading approach, you also get this initial stop loss to get when you are out. When you are wrong, you're able to determine, okay, this is the initial stop loss. At this point, I am wrong because there's a rule that you're going to follow. There's an entry rule and there's an exit rule. You understand?
Yeah.
Now, the trend trading strategy, one, you must have a stop setup, and there are criteria for your setup. Remember the criteria: the trend, identify the trend, identify the key levels, pick a patterns and the key levels in the direction of the trend. Then it gives you a setup. Now, your setup, after having your setup, you must also have a way to determine your entry trigger. What helps you to determine where to enter, which is, like I said, repeatedly, I've been saying this so many times: Fibonacci, pivot point, moving averages, you can use them. But I personally prefer Fibonacci because it gives me an idea by the time it's coming. Then also it helps you also in your strategy, you'll be able to determine where to put your stop loss. Why do I like Fibonacci and stop loss? I know that, for instance, if I buy at 38.2 Fibonacci level or 50% Fibonacci level, my stop loss should be around 61.8. So at that point, I know that the moment it goes below 61.8, the trend has reversed. So I have an idea. So it also helps you for your money management and position sizing, which is your trade management approach. These are various examples on how to use that. So in our next lecture, we're going to work with it. We're going to work with trend and approach, but I want you to do an assignment. This is a brief introduction. In our next lecture, what we want to do, which is next week, is using Fibonacci to determine your entry and your exit. So we are going to spend a lot of time on Fibonacci. Your assignment is to do just to do brief reading. I'll send you material on Fibonacci. Then, with your criteria that we used to pick our stock, we now pick 1 or 2 stocks using that criteria. We now use our Fibonacci to determine where to enter and where to exit. Then we now call the final one of trade and risk management. So
Use Fibonacci to determine entry and exits.
Yeah.
Okay.
I agree with you with the Access Bank analysis you did. Very splendid. Look at what has happened so far in the Access Bank. You notice that I usually say that. You remember in my lecture, I said there's always a confluence between all of this. Now you have the moving average, and also you have the trend line, all forming around the same price.
Yeah.
So it tells us that there's always a confluence now, but we need a conviction that would tell us that if it breaks below the trend line, it means that we are strongly in a downtrend. But remember, we are working with the weekly time frame, so you have to be patient on the end of the week. But if it resumes and closes above, then we are in a buy. So there's nothing to trade at this point in the market. Scan through all the markets. There's really nothing to trade at the moment. I'm looking at individual stocks. There's really nothing to trade at the moment. I've scanned through nothing. So it's better to wait for what the market breaking.
What about this one?
This GTBank weekly.
I'm seeing some green, those dojis.
Doji, but even the last week, there wasn't a conviction. There wasn't a strong breakout. You will notice there wasn't a strong breakout, even if it met resistance at this intermediate resistance point. So there's not really a conviction. Look at the daily time frame. The volume is thinning out. No buyer, no much market participants. So it's better to be off the market at the moment. There's nothing. Everything is just ranging around the particular point. So with moving of Fibonacci, we'll be able to know where to enter, when to exit after our criteria has been met. When you determine the point of entry and the point of exit, then you will not use that to determine your position sizing, how much you are to risk. You're not determining, okay, how much do I want to risk? Okay, if I now know how much I'm going to risk, X amount, how many units of stocks can that X amount buy, considering my stop loss level? So all of these things will work with. So today is just like an introduction around it.
Okay.
I scanned through all the stocks. There's really nothing to buy at the moment, so it's better. And why did I say that? Because this has even given me, the All-Share Index has given me an indication of what the market would likely do in the coming months. So we will likely see a red month in the month of March. So for you that is and it's logical. It's not that we just come to that conclusion. You look at when the market got to a significant resistance point, we started seeing sell-off.
Yeah.
And the concept of distribution, remember, this is the stage of distribution.
Okay.
Because we have accumulation, we have markup, we have participation, and we've gotten to the point of distribution.
Okay, yeah, I see it now.
So why should I be in the market? Is it because I like Nigeria, or because I want to make money?
A patriotic citizen.
So no. So I think in our next lecture, I hope Sunday next week will be good. I want us to start from 2 p.m. to 4 p.m.
Okay.
Straight up, so that we'll go through this. Please, your assignment for this week, just read a bit about moving average. Sorry, Fibonacci. It makes my job easy. Though I will explain everything to you, But I'll send you materials, but I also explain how to draw a Fibonacci.
Oh, I'll read it up.
Yeah, cool. So
I'll read it up. Yeah, send me the material.